This Thursday, the 14th of July. Nice to have your company. It's actually nice to be here. Not feeling that great, I've got to say. I've got a pretty decent dose of the flu. And hopefully, the only thing got me out of bed was trading buddies, I've got to say. So welcome aboard. Thank you for being here. And let's see if we can get something that makes sense in terms of being able to trade today. What have we got? We've got the pound versus the US dollar. Yes, of course we have. Looking for a breakout trade. Now, today's breakout, the high of which is here, the low of which is here, and the midpoint is here at 1.1860. So that becomes our entry point should we choose to take the trade. And we would enter long at that point because we're now below the midway point. We would enter long and have our TP1 here and our stop loss here. Well, a couple of pips under that, to be honest. And I just have to weigh up the risk versus the reward here. We've got an untested daily pivot above us. Am I concerned about that? High, high, low, high, high, low. Above this level. Yeah, look, I don't like trading into an untested daily pivot, I've got to say. But because we're only trading this at a very, 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 very low risk, I'm prepared to take that on and add that to the journal if in fact it does fail because of an untested daily pivot. So we should have TP1. Oh, we'll have TP1 before the daily pivot. Duh, where am I? So that's what we'll do, guys. We're going long here, TP1 there. The levels for that, if you choose to trade it, I would strongly suggest that you trade it at very, 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 very low risk because it's completely unproven, right? Okay, entry level will be 1.1860. 0.051% would be ample. Break of bar 1.1860, and the stop loss a couple of pips below that, which will be 1.1834. 1.1834. That gives us 26 pips. Is that right? Yeah, that's right. 26 pips of risk. And our reward is 24 pips, so roughly 1-to-1. That's our first take profit area, by the way, not our total. Get rid of that. TP1. Get rid of that. We'll make that 1.1865, actually. We'll go up to there. And we will not remove anything. So get rid of that, but we will move our stop to entry. Okay. TP2, we will handle down the track. It is a buy. I won't press that until the open, but I think it'd be pretty safe to press it now, to be honest. But rules are rules. Stick to your rules, guys. Very close. Come on. I think I've got all day here. Yeah, look, I think we're pretty safe now. There we go. I'll put it in the market. Stop loss there, entry there, TP1 there. Righto, so that is the pound versus the US dollar, attempting to get that breakout. And now what have I got? I'm going to update a couple of things since we were last with you, or since I was last with you. Swissy yen. We're in this trade short and got TP1, and then I moved my stop loss to this area here at 139.45. And as you can see, that was a good decision. That turned out to be a small winner, and could have been break even if I'd left my trailing stock, but I decided to move it when I saw an hourly candle or something. I can't quite remember exactly why, but that's what we did on that one. Pound versus the Aussie. This was subject, of course, to the Australian employment figures coming out today. And as you can see, the result was not good for the trade. And the market looks to be very happy to sell this off today. And there she goes. We're about to hit the stop loss, I should imagine, on that. Wow, they're climbing straight into it. So what I did was just before the news, we were at break even roughly, and I halved my risk on this one. So in other words, I closed half of the trade, thinking that exactly this could happen, because the number produced by the Australian Bureau of Statistics today was a corker. The forecast for the unemployment rate was, I think, 3.8%, and it came in at 3.5%. And of course, you can see what happened there. Now, obviously, the market open in the UK saw that number and they sold it off very, very quickly. I would suggest that's probably going to go a little bit further. But that said, earlier in the day, there was a false break of this trade line set up. I was half inclined to place a second order above that bar there. Haven't done that. I think you'd be pretty safe doing that now if you wanted to do that. Put your stop loss probably here, I would imagine. And if you're not in this trade long and still at risk, as I am, albeit a small one, I don't think that's the worst position you could possibly take, because we've already had that big move. And if the market decides that news wasn't as magnanimous, if you like, to the Australian dollar as it does appear, then this is going to be wrong here. Buyers are going to come back in at this point, I believe. How far they can drive it, of course, is a completely different question. As I said, I halved my risk just before the news, or a couple of hours before the news, I think it actually was. And for that reason, I've only got 0.25% at risk here, so I'm happy just to leave it as it is. Well, when I say happy, I'm never happy to lose, and it looks like this will be a loser, but so be it. We still have the shape in place until this is taken out, and if it is, it is. I will still look for another entry long, maybe at this point here, if price does get to that level. That's pound Aussie. Now today, we had 1, 2, 3 game changer bars on the daily chart. I'm completely missed yesterday, so I really don't know what happened. But today's game changer bars were these: the Australian dollar versus the New Zealand dollar. And the only reason I didn't place an order on this, well, 2 reasons really. Don't like trading into that support level. And the other one was that I was already at risk versus the Aussie, or the Aussie versus the pound. So I didn't want to go short here, although that is still my bias. Had you gone short off that bar there from Monday, you would have got some money. But now prices come straight back, as I say, primarily as a result of that employment figure released earlier today. Nothing to do here now until we get a break of resistance or support. Preference would be a break of resistance, get back to this level, then come back underneath the trade line, retest it, and then I would look to trade this short. A break and retest the other way of the support level would also get me interested in trading this short. It's the only way I want to go on Aussie Kiwi. And I think we had a weekly game changer bar that suggested that was the case, if I'm not mistaken. No, it was just my watch list, as was dollar CAD. Let's have a look at that one. Dollar CAD, I'm looking to go short on dollar CAD. and it's just a total mess, as this can do quite often. This particular pair does look potential for this to be a lower high, I must say. Is it compelling to trade it? No, because of all this up and down movement. We're just consolidating here. I don't see any reason to get into the market unless I see a false break once again of resistance. Let's get rid of that phone, sorry. Let's talk range, shall we? Because that's exactly what we've got here. So we might be able to pick it up as a range trade. Probably looking at these two lows, I would imagine, and maybe there, that high through here. That kind of makes sense. So up and down, up and down. If that's the case, we're going to go back to the top and have a look at that. It's at that point that I'd start to get interested in trading this short, and I'll be looking for either a bounce off the top, give me a lower high, or a third, really, false break. One. Well, there's two there. There's three there, really, already. Let's see how that pans out, but I think that's certainly still on my watch list. And I've got to say that eventually, I just don't know when, obviously, this dollar has to turn around. It just looks full of running, though, still. And I'd actually love to jump in here as a scalper and go, right, I'm short now. I'll just go short at the market and put my stop loss maybe above this level here at around about, how high is that? 109.24. So about 110, maybe 110.50, something like that. I'm going to mark that to see how that would turn out if I actually did it. I'm not going to do it, mind you. So say I put my stop loss there, 110.50, ended that market. Why would I want to do something as stupid as that? Well, because the potential reward, which I see as being, minimum down here, minimum. So if I did that, so I'm risking, what am I risking? 175 pips for a potential 1,915. So it's 12 to 1. That's why that's why I'd like to do it. I'd like to be practiced at doing something like that and be confident that this is not going through that level. I'm not. I'm just not confident because I don't know where this ends or how it ends or why it ends. Well, I know why it ends because the Americans are foolish with their monetary policy. That's why it ends. But yeah, I can't get into it just yet. I'll have to wait for a break of resistance or a false break of resistance. But yeah, dollar CAD, I'll still play that if I can. And if it's off the top of this range, then happy days. That's what we'll look for. We've been through pound Aussie, been through Swissy yen, Euro Kiwi. That was our trade of the week last week. It's now just settled on the bottom of this range, which is interesting. What I'd like to see is it come back to the weekly pivot, and then I would place another short order. Well, I would place a short order because I didn't get into that trade. I'd like to place a short order because if the three little Indians play out, as they often do, then this breaks this level short. How far it goes, I don't know, but you'd probably trust it to go down to here somewhere, around about the 161 mark. And we're currently at the 164. We would be at the 165.5 if we managed to get in at that point. So it'd be a worthwhile trade if I can pick it up. But at that point, you're not there. Euro pound, almost ditto. I'd love to see this hit the weekly pivot. I'm massively bearish this massively, it's probably the wrong word. I am bearish this as I was when I saw this happen. And last week we were trying our little hearts out to get into this short off that level, but there was absolutely no pullback for us to do that. There's still no pullback. We've got a little bit of a consolidation, and that's what I'm waiting for, this pullback to this level here, because I think that's the retest area of the breakout. And if that's the case, that's where I'd like to get into this short. And again, fairly decent rewards available down here somewhere. So I think that's still on the cards for me. Aussie Kiwi, I've spoken about. Aussie dollar, not really interested in that at the moment. The pound, we've got our order in. My goodness me. That did have a funny little start to the day, didn't it? Short, long, short. Interesting. So, yeah, we've got that order. And if you missed that earlier, the entry is at 1.1860. Stop loss is 26 pips. And the first take profit is, whoa, not at 5 pips. I thought I changed that. 1.1865. Because it's 1885. That's why. There we go. That's changed. So the TP1 is at 25 pips. 1.1855. The euro, which is kind of a upside down version of the dollar index, of course. Once again, this has to end. I can't tell you when. We are now at parity.
Sorry to cut in, mate. I may well have a trade.
Happy days.
So let's just quickly go over here.
I'll just drain the swamp while you do.
Oh, mate, how you doing?
Holding up, mate. Holding up.
Yeah. Okay. Let me show you this. So this is the trade. It's a short on the FTSE. I'll put it on now. Let me just do that there as well. There we go. Now there may well be there may not be that much room with this one, but I think we could definitely aim down here, which is around about a 40 pip move. I'd be looking for down here. Bit of a delayed reaction, strange one really with the market yesterday, because we had sorry, just so everybody's clear, I've just put a short on in the foot, so I'm not saying you guys should get into it. And be careful if you're trading an ATW account that you trade the correct management. Your management will probably be putting your stop losses above this daily pivot here. So you're looking at around about 24, and you're looking at probably about a 40 pip move, so nearly a 2-to-1 move. If you can get your stops in the right place and your entry in the right place, if the trade works out. Bit of a delayed reaction, as I say, from the CPI data yesterday is starting to filter through. I am inclined to agree with Jeff on the dollar. I think the dollar is probably getting close to running its course. The fact that participants are looking for a potential 1% though on the dollar, 1% rate hike, sorry, from the Fed, may be the one thing that that allows the dollar to continue to stay elevated. But if we have a look at it, let me just set these levels here. I mean, just make sure.
The Canadians did that, eh?
What's that, buddy?
The Canadians did it. Pressed the
well, do you know, and that was a complete surprise for me. That was a real shocker. There's another move down here, but just so I'm going to be taking at first target as always. Now, first target is probably it could be a bit more shallow than I thought. That looks like a level there. There's first target. So first target only looks down a little bit there, but there is a chance we come. This is the most likely zone if this starts to break down, and the market is pretty bearish. But as I say, I'm going to stick with my strategy, which is profit at first target, and not try and switch at this stage, because there's no need. I only need to switch if I'm holding positions, and I don't need to do that. So let me just check this level so I can put it on my other account as well. Looks like around about 70.70. There we go. And so let's have a look then. So the Canadians did, which was a bit of a surprise. This is the dollar. Now the dollar has been obviously pushing very, very high, and I totally see what you're saying, mate. That this is starting to get way elevated.
Yeah,
and if you start looking at the is that not switched? Why is the chart not switched?
There you go. It has now.
Oh, that's slow. Yeah, this is starting to get way elevated. Now, if we kind of like think about why this may well change, The 1%, the potential 1% rate hike is what could push the dollar higher. But I thought it was quite significant yesterday. We had the CPI number out, and this was yesterday's price action. It was down, it was up, it was down. Then we've got this gap, which is again, a potential sign that the dollar is at least a week into the daily pivot today. Now, I wonder whether there might be some concern with the dollar raising interest rates by a whole 100 basis points because of the lack of growth, the general lack of growth in the market. Now, there are there is general situation. The unemployment rate is back down to pretty much the lowest level that it tends to get to, which means the only way is up from here. That's the first thing. ISM is shrinking relatively significantly, but it's edging closer to the 50 mark. Gets below the 50 mark, that's going to start suggesting that a recession is on. Global GDP is shrinking as well. So the normal route for a central bank is raise interest rates until the pain really starts to get felt, then reverse that position. And I guess there might be some people that are saying, how much further can you go? Firstly, without damaging the economy, and secondly, without damaging the economy in such a way that it's uncomfortable for you guys too. Because they've kind of said recession, that's okay. But I think that's because they're almost expecting the recession to be quite light. That the recovery to be relatively quick after a potential sort of recession occurs. And that's because they're all, again, expecting inflation data to start creeping down next year, which may well happen. Some of this is about supply issues, and the supply issues has really come off the back of the coronavirus situation. But that hasn't really gone away, as we've seen in China. It's the coronavirus is still sticking around. And there may be some more supply shocks. And if that's the case, inflation probably isn't coming down sufficiently. And that would either mean they're going to have to continue to raise interest rates, or they're just going to have to live with those higher numbers. So the economy is in a very, very difficult position globally. So that would say to me that the dollar could, off the back of this, start to weaken. Now, the elevated level is also a factor because there will be some profit taking if there's a hint that people could get a shock that takes away everything that they've made effectively. So, are we getting signs and signals yet? I don't know. Maybe maybe the yesterday's moves in with price action after such a hot CPI print is a bit of an indication that the dollar's about to reverse. It's not tradable by any stretch. Not reverse, I should say, but retrace. It's not tradable by any stretch. Trading the dollar short here would be very, very dangerous. But there could be a bit of a hint that that's about to happen. And that would obviously send other assets in the opposite direction, the likes of gold, silver, and even the euro, back at parity could actually start to kind of turn around for a period here until the dollar starts to move up. And it's just because of the question of, is the dollar, with all those factors in the mix, and even with 100 basis point rate hike, is the dollar now overstretched? Is it a fair value, and maybe has it got a little bit over fair value? The 10-year bond yield also started to shrink yesterday. There's massive concerns about the yield curve. So there's just enough out there which would maybe point to a possible weakening in the dollar. As I say, mate, trading it at this stage is is difficult, and you would be sort of scalping and attempting to take on something which doesn't have the fundamental backing to move down. Yes. Seasonally, the dollar's weak at this stage.
It's a crazy thing to do, but
yeah,
like I said, I'd love to. It entices me to try something like that for a small risk.
Yeah, and the difficult aspect of this as well is if we sort of like take all factors into account, the first fundamental, second COT data, and third seasonality. Because yesterday's move was on a Wednesday, the COT report that's on Friday is going to be more than 10 days delayed because they report Tuesday to Tuesday with a release on Friday. Well, of course, this Friday's release will be, from 2 days ago from the previous Tuesday. So we're not going to get the Wednesday, the impact of what happened on Wednesday until next week's COT report. But that might be okay.
You're going blind.
A little bit, but I think that's a really poignant point, because if we're going blind, that suggests that we'd be early. If we're going to be trying to trade the dollar now short, and we are going to use the information at hand, we haven't got the COT data to be able to use. We just don't have it. It's too blinded for us right now, so we can't utilize it. So that would suggest that maybe dollar in August could be something to potentially start to come off of. However, that does lead us towards the next rate decision. And as you said, Canada, big shocker, really.
Yeah.
And the oil scenario with Canada potentially could put that under a little bit of pressure. But is the Canadian dollar, now the Canadian dollar would suggest, because of what happened, it would suggest that the Canadian dollar may well be the thing to go against the dollar.
Well, that's my
possibly.
thesis, but it's also the chart's telling me that as well. But it hasn't happened.
No, it hasn't. It hasn't happened. But and I guess this is the question: are we getting a delayed reaction? Are we getting is there actually nothing to see here? Is this something that we shouldn't really be focusing on? Is the reaction delayed? It's very, very difficult, right now with all the information we have. With the information we have, and then you place price action on top of it. But of course, the price action is there to stop us making mistakes. It's there to help us to stop making mistakes. So if we've got this general idea about, okay, well, the CAD should be along against the dollar, could be along against the dollar, but the price action hasn't yet turned around, then we wouldn't trade this in the opposite direction. We're just going to wait for the price action. And if it doesn't happen, it's no different than putting your buy stop or sell stop in on a bar to make sure that you've got that little bit extra protection to make sure that the direction's in your favor before you enter. That's what this is a bit like, isn't it? We've got to wait for price action to suggest, actually, dollar is going short, and then we're going to pick assets that would be favorable against it. I pains me to say it, but I still think that the situation with gold could improve off the back of it eventually. Silver I quite like. If we look at those particular charts, gold and silver.
Well, gold should be a massive benefactor when it happens, because it's been
it should. Yes, it should.
I got to say, it's like holding something underwater. That's what it seems like, because eventually it's going to come to the top. It's going to bounce up.
Yeah. Well, I'm still in these trades on gold, and I haven't been able to clear out.
The chart's telling me that's not yet.
Yeah. Well, exactly. Yesterday's bar was a really interesting one. It is a potential buyer's bar, but there's probably not enough down here. There's certainly no pattern, and considering this was a breakout and the retest has not held, this is pretty negative. We might actually end up with an equal low here on the closing price, and that could promote some buying possibly. But really, with gold, I think that it gets really interesting here. I'd really like it down at this level, because then that's another 45 pips. $45 below current value. I like gold there. I like silver here. I like silver along this level here, which again is pretty close. We're not that far away with a potential long on silver. If we hold on a minute, that's right on top, but that's not right, I don't think. This is what I want. Yeah, that's what I want. This would be interesting. It could be here. We've got some horizontal levels here. We might be there already. Actually, that's a pretty good level, isn't it? Look along here. There's the gap there. Nice. Actually, silver looks pretty good. Might even take silver on if it dips down a little bit again here.
I haven't got a silver chart. I'll make a silver chart.
Yeah, get yourself a silver chart now. Silver.
It owes me.
Silver does.
Yeah, the prick of the thing.
Yeah.
I traded the wrong leverage, if you remember, about a year ago. It just,
Oh
it
yeah,
hurt me.
yeah. Looks interesting actually. Silver looks quite interesting here. But the issue really for silver is that if we're getting global growth, which is shrinking, silver's a difficult one because it's a precious metal, but it is also used in manufacturing. So if manufacturing is diminishing, then what happens to silver? However, in saying that, it could be a pickup in price down here, and then as things start to kind of help a little bit, then we actually see silver start to really rally in, I don't know, 3 to 6 months time, possibly a year's time. But the value of it actually looks quite attractive. So I'll have another look into silver, mate. Just to see. I didn't realize that the price was actually pretty significant here. It does look like there could be maybe another small dip down to around about 1850. We're currently at 1890. 1850 looks like a decent point to try and get into silver. So I might try one out with silver if it dips down and gold just isn't performing, which it currently isn't, of course.
Yeah, as you say, it's got to hit something solid before it does anything.
That's the key, isn't it?
Yeah.
That's the key. There's no point in trading it at these levels because the fundamentals don't match. But what may well happen is it hits that solid level and it says, okay, actually, at this particular value, we know everything that's coming. And at this particular value, if anything good happens, then this really is a decent place to get it. The euro hit parity a few days ago, just managing to start to get some interest as well. I've also got the same opinion about the euro, that parity is a solid level, and there may well be some buying in this particular area.
Yeah, you can't imagine it's going to slip through there without some support.
Exactly.
It's impossible to believe.
Big issue, of course, with the euro is the economic outlook is so poor, and even though we're starting to see global weakness, the US economy is much more resilient than the eurozone. So it seems, things do change. And what have we got?
And we always say at this time, when we hit a substantial, well, I'll call it historic level, which of course it is. We always say things like, this time it's different. It's not going to be different. It won't be different. It'll hit this and it'll find support because it has forever and ever and ever, So I don't expect it's going through here easily. That's for sure. It might dip through it, but I don't think it's going to last.
Yeah, I agree. And maybe we're waiting for that dip before we get into it. But I think people are probably quite keen. And I think a lot of the boat is weighted on the side of the euro dollar short, which is always a dangerous place to be. Same with gold, same with all the other commodities, all the other currencies as well, probably.
Yeah, and I think what we're saying is opportunity is just around the door here for some decent moves. I think anyway. Not that we have.
Yeah, we need a signal.
Yeah,
we need something to help us out. Let's have a look at the data and see what might provide that signal for us. Little to have a look at really today. We've got FOMC Waller speaking later today. Is he to come out and say, the 1% rate hike is on? If he comes out and says, actually, we are still going to go at 0.75%, and then we're going to see how things are going, we feel like we are on top of the curve, which Jerome Powell has said, and that's the problem with the 100 basis point rate hike from their perspective. It kind of intimates and forces them to admit that they are behind the curve, which we all know they are. But they may not want to admit to that, so they might go with 0.75% instead of the 1% rate hike, and also look for 2 rate hikes at 0.75 rather than maybe one at 1% and one at 0.5%. I think they're going to aggregate out at around about 1.5%. Potentially, I mean, the dollar is getting, the interest rate is getting probably uncomfortably high now. And that sounds a bit stupid to say,
it does historically, doesn't it?
yeah. But I think 3.5%, anything north of 4% is probably quite significantly damaging. So I don't think they're going to.
That's a big danger zone, I would have thought.
Yeah. They're not going to want to go to that level, but it could happen. But you know, maybe a 1% rate hike that may well, if there is a 1% rate hike, that may well trigger dollar shorts because they are getting closer to that potential ceiling level. Now let's have a look at when that might come. So we got data today, which has come out very positive for Australia, and we got
that's a massive beat. Massive beat.
It really is. But this has got to get close as well, mate. I can't. You know, let's have a look how often. Right. I mean, look at that. 3.5% is the lowest that we've had. That
would be nearly an historic low.
It looks pretty historic, doesn't it? I mean, you know, we're not getting data which goes back forever, but we are getting the 2008 level was at 4%. So we are getting potentially historically low unemployment levels here. Now, of course, that is bullish for the Australian dollar. It's very, very good, but you have to eventually go, okay, well, just as things don't go through levels forever. You know, eventually things do reverse. What goes up must come down. What comes down must go up. So at some point, things are going to start breaking more significantly. The unemployment level is going to start shooting up. Then all of a sudden, the narrative will be central banks will either have to pause or lower interest rates because that's their tools. That's what they're going to do. So even though this looks very, very good, is it starting to trough? Well, not by this evidence, of course, but you know, are we going to start to see the next 2 or 3 releases around about this 3.5 level, and potentially suggesting that this is as good as it gets, because as good as it gets means that things will reverse because things are in a constant state of flux. So I think
that's pretty tight. It's a pretty tight labour market there.
Yes, it is, mate. Yes, it is. Yeah, dangerously tight. You know, some might
actually
say.
That's quite amazing. If you go back to that chart, Ash, for 2 seconds, and I don't know if everyone's familiar with geography, but that chart, somewhat remarkably, is the map of Australia, at least the top half of it.
Oh,
it's amazing.
That is quite amazing.
Yeah.
So what happens at the bottom of it? Sort of dips down and comes up again, right?
Yeah, it's got a big bite down the bottom.
Big bite. Yeah. Maybe that's what we got. That's
what
we got going on.
Called the Great Australian Bite, as a matter of fact, and I'm sitting just below all of that, of course, in a little island called Tasmania.
Well, that could be going on. So anyway, that is something there. Forecast GDP out of China is at 1.2%. Previous at 4.8%. You don't really need to sort of see too much more to realise and understand that that particular number would suggest that. God, it's very, very lagged, isn't it? That where I'm changing my screen. That particular number is. Don't know why that is. But that particular number is a huge deduction in Chinese GDP. Could be significant. What else have we got? Retail sales. So all this stuff. Preliminary consumer sentiment is likely to come out weak again. So all these numbers may well start to point to, you know what, Fed, we are struggling here. You know, we don't really want you to be hiking interest rates anytime. Any more than what we've got. Now I'm just looking at the next one. So the ECB press conference could be a significant next week. The financing could be significant next week. That may well be a buying opportunity next Thursday from the ECB. Flash PMIs. Let's see what else. Let's see what we got. What I'm really looking for is this 27th of July. This is what we're really looking at right now, the 27th of July. So basically 2 weeks. We're looking at 2 weeks yesterday for the dollar to possibly smooth out. And that will be about how much they raise by and what's the statement afterwards. CPI data has again proven to be higher than expected. Of course, it's slightly lagging. And there was you know a couple of bits and pieces which would suggest that there could be some relief for people, but that's, you know, we're getting to the point where I think we should be quite sharp on potential reversals in the near term for the dollar. Is the overall point here that I'm trying to make.
Yep, sounds good to me. But yes, because we're not scalpers. But I have
No,
put,
and
I have put my
this
little
date
line
as
in the
well, mate.
sand.
We need that date. We need to recognize that the 27th is really what we are now kind of circumventing. If we are going to be looking at the going short, do we go short into the rate decision? Do we wait for the rate decision? Well, the price action should be able to tell us that. So wait and see is the key.
Yeah, well, you've given us a whole bunch of things to trade it against or to trade against it. And I think, the pick of those are where you pretty much started the day. And that's in a currency, that's going to be the CAD for me. And, in a commodity, that's probably going to be gold.
Yeah. Yeah. I mean, the euro is interesting, though, isn't it? Because of parity.
Because it's so far. Yep. True.
The things don't really balance out too well for the euro. But that potential parity level could change things somewhat, and as the FOMC gets closer and closer to the 4% mark, we're currently at 1.75. So if we're currently at we're currently at 1.75. Yeah, we're currently at 1.75. So we got another 2.25 before we get to fours, and I think that they're going to probably try and stop around about 3.5. So we may well be halfway home.
Yeah, 3.6 I think is what the forecast was, or not something.
3.6, right?
Whether they stick to that, not another story.
Yeah.
And I just go back to the previous set of rate hikes out of the global financial crisis, when we went out of, let me get this right, the time frame eludes me. I think we went from QE 1 and 2 or something into an interest rate hike, which was forecast to be 1%, 4 times in a row or something, and they went too fast, went too hard, and it had to come back. And of course, we went down to 1% or whatever it was in the States. Can't remember, 0.25 maybe it got to. So it's never quite as the Fed says it from the beginning, in my humble opinion, because things change, as you say.
Yeah, exactly. So
different things happen, numbers come in.
If this was a potential scenario, mate, so you've got lower growth, lower growth globally. You've got data from the US which suggests that the consumer and business is starting to be, express concern. You've got a NASDAQ, S&P, and Dow and Russell that are all kind of coming down significantly. Then you've got a dip in the CPI data, and I'm talking about a significant dip. Not a 1% dip, but a 3 to 8% dip, which is possible. The trajectory has been going
given the
circumstances. In such a way.
Yes, yeah.
So after that, what would your assumption be of the central bank's next move?
After all that,
yeah,
well, they'll probably go back to printing money.
Would that be the first thing, or do you think that the first thing that they would probably do is start dropping that interest rate back again?
Well, one will go with the other, won't it? They've got 2 tools at their disposal. Yep. If they start printing money again, which I don't know, the States, it just adds the fuel to the fire.
Oh yeah.
In terms of interest rate, I suppose yes. That's probably the first course of action. I think they're not as smart as we give them credit for, frankly. So,
mate,
I don't know.
Do you know? Interesting you say that, because I think if we kind of consider the Federal Reserve, then we almost get fooled into thinking that it is just the people that we see. Well, of course, it's not. They're not the people out there sort of providing data, providing advice. It's same as the government. In this country, at least, we got the civil service that pretty much run the government. So all you need is some people that have just kind of like, come straight out of Harvard or straight out of Princeton or any kind of university, and got an economics degree, but has got no experience with life and no experience with businesses on the
It's all
ground.
based on modelling, yes.
It's all based on modelling and making huge mistakes and huge errors. So I think you're absolutely right. You know, to say that they could potentially be as smart as we'd assume them to be, I think would be misleading, because it's not Jerome Powell. You know, the Fed is not Jerome Powell. The Fed is just so vast and so deep. There's so many people, so many departments involved in making those decisions that yes, he's the mouthpiece, and he'll probably have a bigger say than most. But there are plenty of people in the Fed that probably aren't ready or qualified to effectively run the most powerful nation on the planet financially. So yeah.
Certainly, they're getting a caning from economists right around the world who are saying they're dipsticks, you know, at the moment, because they've wrecked it and they don't know what to do with it. And I think that's probably true.
Yeah.
And so you go back to answer your question, think of the most credible or smartest thing to do and flip it. That's probably what they'll do. Yeah. Which is crazy to say, but
yeah.
Kind of where I'm at.
Absolutely. Okay, mate. Well, I think we are. I'm done really with the analysis. We looked at the dollar. We've looked at. We haven't looked at oil, but the oil scenario really is, you know, painting some a similar picture in many respects, because the oil market has started to weaken, and quite again, this has been quite a significant drop from oil.
Yeah, it has.
You know, north of a 20% drop down in oil, and this. All you need to do is look at oil to recognize that things just don't go up and up and up and up forever. So looking back at the dollar, the chance that this can't go up and up and up and up forever, it's just unsustainable. So I think that things are going to start turning around. We just have to see if and when that does. When that does happen. There won't be an if. It will be a when. And take advantage of some of the moves. But as I say, oil really kind of shows us the way in many respects, and so does the Nasdaq. You know, the Nasdaq couldn't continue to go in this trajectory, and now it's kind of like looking down here.
I was going to ask you what you think of that now, because I'm waiting to get short again. But now's not the time.
Yeah, well, so the Nasdaq obviously is an interesting one because it probably does have some further room to come down. But the gravitational pull with stocks is that they go up. The question is, has the Nasdaq come down sufficiently to suggest that we could start to bottom out around here? We could start to kind of form some sort of sideways kind of price action for a little while. And the answer to that would be possibly. So I'm not sure whether it would be the best thing to look at anymore. I think looking at the dollar, looking at the euro, looking at gold, potentially looking at maybe not so much oil. I think they're much more interesting because they are at extremes. Now, if you get the extreme levels, in many respects, that becomes a bit simpler, because all you're really looking for is a signal that things are topping out, and everybody will panic because they won't want to lose the cash that they've accumulated. In this scenario, the conundrum is this where we bottom out? Because if it is, then we're going to start going up again quite sufficiently. I suspect it's not, but shorting it may not be the easiest thing to do.
No, well, as I say, the current price action is telling me it's finding it a far, far harder task to get short now than it did in the first two instances. So phase one wasn't terribly much of a problem, had a good retracement. Phase two wasn't terribly much of a problem, had a reasonable retracement in 1 day or whatever chart you're on, a week, and then it fell again. But it is starting to find support. There's no question.
Yeah. And when you get news and data which is negative and price action holds, you start to wonder.
That's right.
Makes you start to wonder, doesn't it? Makes you start to wonder whether actually we might well be done with this particular move. Investors might be sort of saying, now it's time to take a bit of profit or potentially, with this one, start to accumulate positions again. So are we bottoming out? Probably not. Are we going sideways for a little while? Maybe there's one more dip, but I don't think it's going to be quite as simple to pick as the previous two. So it might be better to wait on this one and actually look for long signals after that dip. You want to blow off top in the dollar. You want to blow off bottom in the Nasdaq really, and then sort of like start to go long. But for right now, I think maybe edging towards euro, maybe edging towards gold, maybe edging towards dollar short, maybe edging towards the CAD possibly. Maybe easier. As strange as it may well sound, it may be a little bit easier.
S&P, same story.
Yeah, I mean, so we've got some earnings
Same
seasons
chart, really, isn't it?
Pretty much, mate. Yeah. Yeah. I mean, there's the pandemic high, the pre-pandemic highs, and that area still looks pretty rounded to me. 3,500. We're currently at 3,780. So it does suggest that there's a little bit further to come down with the Nasdaq and the S&P. But the earnings season, I think, might be pivotal. You know, the chances that companies are starting to cut back on projections becomes a lot more probable, and that might be the dip we need to see. But as soon as the Fed flip, or as soon as there's any hint that the Fed are flipping, S&P, Nasdaq, gold, the CAD, anything, the euro, probably likely to rally. All going to rally in the opposite direction, and I guess right now it feels like we're at the midpoint for the moves. The policy making for the dollar. Midpoint is the midpoint the right time to sort of start flipping in the opposite direction? It might be because we're speculating, and if we don't speculate early enough, then the moves kind of happen before we've really got involved in it. The
Not
data
so sure
coming
about
out.
the S&P this time, because I think there'll be a slower increase than we've seen in the past.
Yeah,
it's certainly in the last 10 years. It's just been ridiculous.
Yeah.
The pace of that has been crazy. I just don't think once it does turn around that we're going to see that repeated. I'll put it that way. Certainly not the pace.
No, well, if what we end up having is a Fed that is topping out, let's say, at around about 3%, and they fluctuate then between 3 and 2, 3 and 2, 3 and 2, into the near future, as they try and control inflation while controlling the economy to a degree, and make it a soft landing, and it's not too extreme. That would suggest that bond yields will be relatively comfortable place to put some money. So bonds would be a good place to put money, which we've not seen. People haven't bought bonds, which would take some money out of the market. So maybe the split between stocks and bonds actually starts to become a bit more normalized. It's been nothing with bonds recently. It's been all stocks, but maybe that's going to normalize a little bit. So I agree with you. I think that maybe the next move in the S&P is unlikely to be quite as extreme. And it could be a bit more gentle, where people are they need to go after value rather than growth in a scenario like that.
And what about outright speculation, which it will be, in my humble opinion, if the market, not so much the market, but sections of the market do actually reinvest in crypto?
Yeah, that's a fascinating one. Yeah,
that's the massive reward situation there, because it's so volatile, if you like. But that brings it to mind. Does crypto disappear, or does it resurge? And you've got to think it's got another one left in it, hasn't it?
Yeah,
I would.
Yeah, I would think so, mate. I mean, always difficult to say what's going to happen to any asset. There were companies that went under during the dot-com bubble, but it appears too woven into the tapestry of the economy and the financial system. Even though there's not that much money, comparatively speaking, with fiat involved in crypto, we're talking about billions rather than trillions. Even though there's not that much money, it still feels like it may well have got enough threads to kind of like stay within the in the weave. So I think it stays personally, and and it's still worth taking a punt on some value. And if it is value, and if it does kind of rocket to the upside, you don't really need to kind of break the bank to get involved and actually make a tidy little profit out of it. Yeah, I would.
I was interested to hear Simon on Monday, and I asked him the question. He had some limit orders set at various levels to buy Bitcoin back, right? And he changed his mind and cancelled all of those. And now he's going to wait for the signal, just as we've been talking about today. He's now going to wait for the signal for that to turn, which I think is a great move, because it's a whole lot easier to get into trouble if you're trading in against momentum, if you like, which is what limit orders are all about. So I found that a little bit concessionary, if you like, in that the confidence level maybe just waning a little bit. Or
I think that's fair.
Is it a conservative move? I don't know.
I think that's fair, but if you I guess you could ask the same question about the Nasdaq. If the Nasdaq, is the Nasdaq going to disappear? Are the companies in the Nasdaq going to disappear? Well, they're not. And then it's just about going, well, where's the best possible value? And you need to say, well, you know what? If the Nasdaq comes down to the pre-pandemic level, I'm interested. I'll be interested in along with the Nasdaq at that particular point. So the Nasdaq comes down to around about the 10,000 mark. You go, and you know what? I'll have some of that, because that's all of a sudden seems like pretty good value in comparison to what we've had over the last few years.
Well, tech's not going to disappear, is it? I mean, it runs the world.
No, it's not, mate. No, but I think the correlation with Bitcoin and cryptocurrencies and tech is so tight that it would suggest that there is some lower to go. There's some lower to go probably with the Nasdaq, so you wouldn't currently trade with crypto. Now, if the Nasdaq starts to pick up and people are going, and if it's significant, people are saying, well, you know what, we're back on growth, we're back on tech, we're back on starting to innovate. Then crypto sort of has got a place in that particular environment. Yeah. So I think it's waiting for the bottom with the Nasdaq would be the wisest thing to do. I don't think you have to look at a crypto chart at this particular period. I think you got to watch this and see what's going to be happening with this, and then potentially start to get back into the crypto market. Gary, Taxi 3307, what's that for, mate? Taxi 3307.
Taxi 3307.
Was that meant to be for me? 3307. Discard. Okay, mate, no problem.
Maybe Gary's at the pub and he needs to call the taxi. Just kidding, Gary. Maybe
anyway, mate, that is it. That's the full roundup of everything really right there. We'll finally sort of we'll finish on this FTSE trade. That we'll see how it's doing. It's edging there, isn't it? It's struggling a bit, but it's edging there. Might well get our profit here, but we'll see. Yeah, that's it, mate. Anyway,
all right. Just an update from the pound has been triggered, and let's see how that's going. Well, nothing terribly bullish, I suppose, but I guess at this point you'd rather be having your first take profit there than here. So again, if we hit that, we'll move our stops to entry, won't take any profit, and look for a target at 2.5 to 1. I didn't put that in before. So the risk is 24 pips. So 48 plus 12 is 60. 60 pips at 118.85 will be 119.45, which is about there-ish. If I'm not mistaken, not even a DR1. So that's completely feasible, I would have thought, on the pound breakout trade today. Let's see how that goes.
Nice.
I did say before I was considering adding to this as a false break of support, but I'm not going to do it. As I said, I was going to scale into this if we got up here and retested that level rather than, and of course we're still under pressure given the Aussie news, so we'll see how that goes. I'm not going to change anything. I'm just going to leave that. The euro, I did want to have a look. Probably too late now. I wanted to have a look at it because it was an untested daily pivot. There's nowhere to go here in terms of a trade for me anyway, unless we got a false break of support, which maybe we did. No, not really. It's too quick. So the thesis would have been find a false break of support and test daily pivot. That may not happen, but I can't see any way in at this point, unless it does go back down there. I'm still watching Aussie Kiwi very, very closely. And I think that is tomorrow going to be a very, very interesting chart that we're looking at. Given the Aussie news, which was a massive beat, as I said before, on the numbers today, the top of this range has been quite solid, for a long period of time. And the level, of course, you'll be not surprised to know, is 110. And as I continue to say, whenever the Aussie and the Kiwi get 110, I want to sell it. When it gets to parity, I want to buy it. So I'm a seller. I just haven't found the correct way in yet because the market's not giving it to me. But if it does, I'll certainly be looking to sell that. The other one, euro pound. Well, I hope this rallies back to that weekly pivot. As I said again, if we can get a pullback to here, I'm a massive fan of euro pound short, given the market structure, which is very, very clear. You'll remember we tried to get into this last week. So they're still on the watch list. And the other one, of course, is dollar CAD. Now, dollar CAD has to, well, it really does have to hit the top of that range now. And the reason for that is because it's come off the bottom last. And when it comes off the bottom last, I've got to expect it's going to the top. So that's, to my mind, the best way to trade dollar CAD at the moment as a range. And if you manage to get in at the highs or around about the highs, then leave something open just in case this does fall. So get some money in the bank before there, and then and maybe even scale into it if you get a nice little break and retest. As we say, the timing on the dollar is very, very finicky at the moment. And again, as Ash said, probably looking at the 27th before we get a clear directional bias on that. If it continues to go long, I'll be very, very surprised. But hey, the market surprised me before. It's as simple as that. Righto, I'm very, very close to going back to bed, Ash.
Go and do your thing, mate. Yeah, thanks for coming in with me as well, because it is always better to have the trading buddies and the crew together rather than sort of have to do it all on your own. So I really appreciate it, buddy.
It's far better for me to get up and actually do something than lay in bed all day, which I had to do yesterday. Yeah. Just couldn't get up. Yeah. Those shivery shakes and all that crap that goes on when you got the flu. But fortunately,
fair play to you, mate. Fair play to you. Well, get yourself in bed. Go get well. Thanks for being my buddy for the week, as always. Thanks to Marlon as well for looking after us and all the guys in the room over the 2 days. We will see you Mondays. And next week is our last week for the Trading Buddy show until a 2-week break, and then we'll be back, of course, in early August.
Happy days. Thanks, Ash, and thank you guys for being our Trading Buddies. We'll see you next Monday. Have a great weekend. Bye bye for now.